Okay. Okay, sorry. My keynote. Okay, we were at RSP, right? Mm-hmm. Doing that. Sorry, guys. Let me see if I can. There we go. Okay, XLK. RSP. So this is the equal weighted S&P 500. Okay, so this is the month for RSP. Equal weighted meaning the S&P 500 is tilted quite heavily towards technology. So it's a weighted index, meaning that it gives more of the pie to the technology names. And so I like to look at RSP because it's equal weighted. It doesn't have any bias towards one constituent over the other. So it really gives you a very good broad feeling for the overall market, not just uh, the weighting that technology would get with the S&P 500. So this is RSP monthly. Remember last week we talked about, hey, look at, I like this consolidation all those weeks in a row, and RSP popped its head out. So I went, well, that's pretty good because this is a nice base for that breakout last week. And we put this little purple dotted line. It's a very minor area of support on the weekly, and it blew through it this week. So this is RSP. So now it's come back down into this base. So we'll have to see the week ahead. Will it sort of say, okay, I had a foundation. I'm coming into a support zone number 2. But RSP, that's a big dramatic week. And there's the support for RSP, that purple dotted line, because it's picking up these candles from over here and it's underneath the base of those candles that we're building for 1, 2, 3, 4, 5, 6 weeks. So let's see. And so last week we talked about the market is stretched. Will it look towards a safer sector of the market? Will it look towards consumer staples? And we pulled up XLP, which is the ETF for the consumer staples space. Here's the 5-year monthly, beautiful blue line up tilting, consolidating chart. The sector looks like it wants to lift in this area. So we are looking for this doji that is so far shaping up for the month of October to resolve itself to a more positive looking candle. And if that happens, then it will give lift to names like Coca-Cola and the constituents in this basket. So we're looking at the ETF for the sector because the sector will help those individual names within it. So we see this pattern of support here, the uptrending blue line, and this is how it resolved itself for the week. So it's starting to look like it wants to build a base and lift here. So this is XLP weekly. There's the doji, and the candle from last week is still a doji. It's not, the bar is not as small as it was with the prior week, but it's still indecision because the wick at the top and the wick at the bottom are fairly equal. So it's not giving away any direction yet, but it's in an overall uptrend and it's a defensive sector of the market that might get a bid if things get a little wobbly. Coke is part of this. So when we look at Coke, we want to be aware of the sector that it's in. Does that make sense?
Yeah.
The market is looking for a more defensive place to park money right now. So happy Thanksgiving. Now let's look at the TSX. This is the TSX, which is our largest stock exchange, Pam. This is our S&P 500. We are a much smaller economy, but the TSX is our S&P. It really is the one-stop shop for the health of the overall Canadian stock market. And like the others, it had a very strong September, and this is where we are for October so far. The TSX had a red week that married up with the markets in the US and is coming down to this area of support. So there was a doji of a pause and indecision, then it rose, but it was canceled out last week. So this is an important area for the TSX. So that's our area of support. We want to make sure that it does not bleed below. So it's all about waiting and being patient about Monday to Friday. How does the candle for the week shape up? Last week's chart of the week was Coke, and we took it from our Buffett and Dividend Kings list. And there's Coke now. So Coke is trading in this wedge pattern. It's part of that defensive sector, XLP, and it looks like it's shaping up to have a positive October. We still have 2 weeks left. We'll have to see how it goes. But this is Coke, uptrending, beautiful 5-year chart with the beautiful blue line tilting up. And as we talked about in the chart of the week video, this goes back to 2011. Coke's been in a very powerful uptrend, not just for 5 years, but for since 2011. Okay.
If you look at Coke on the weekly,
Yeah,
would you
this is the
consider
week.
it more? Oh, okay, that's the weekly. I thought it seemed still doji, but maybe I was looking daily.
I think
Okay.
maybe you were looking at XLP. Is that possible? There,
Mm,
XLP, that's a doji on XLP, which is the sector.
maybe,
But
maybe.
this is how
Okay.
Coke is looking right now. So,
Okay.
so we were putting it forward as our chart of the week. It's we're seeing the turn come in, and now we just want to protect that base. Okay, so it's all about Coke staying on the right side of the V. This is the left side where nothing good happens. We want it on the right side.
So would you wait a few more days, another week to add more to that position to
Yeah, I
get
think
more
given
confirmation?
given the week, Pam, I would wait. So I'm going to evaluate this on Friday,
Okay.
and see what the market delivers and those earnings, how they're coming in before I add to Coke. Just because the market is Friday was pretty volatile. So in the context
Yes.
of what we're looking at, I think we're better off waiting till Friday. Okay. AMD was our first chart of the week, and we were anticipating AMD breaking out of this wedge, and AMD had that nice breakout. So this is AMD now. And this week's chart of the week is going to be Lowe's Corporation. I'm choosing conservatively because the market is elevated and at higher levels. And so I'm going to choose something that is conservative from the Dividend Kings basket. And my chart of the week this week is going to be Lowe's Corporation. Pam, you're probably very familiar with Lowe's. It's the second largest hardware retailer in the US after Home Depot. This chart I'm going to explain in my weekly video that comes out on Monday morning is it's been in an uptrend for a very long time. This is the 5-year monthly. I love this formation, the way it came down and it kissed the blue line. And I love this very dominant mother candle from August. And I like the way it's come into the candle. So just like Coke, I'm going to be looking for a turn on Lowe's. I'm looking for the puck pass. So I want to see the evidence come in on the weekly. So I'll be watching the weekly very carefully for lift on Lowe's. Okay. And then we talked about that economic data. So the government shutdown is pretty significant in terms of, I know it's happened before a number of times, but there seems to be a bit of a deadlock and there doesn't seem to be a resolution on the horizon. That could change tomorrow. But the longer the government stays shut down, the more disruptive it gets to be for a lot of people, right? So the US economy is really driven and held up by the consumer. The consumer and the consumer spending is a big, big, big part of the US's overall, the mechanics of how the market moves higher. So if people are not getting paid and businesses are not getting orders from them, then that could cause some unintended consequences. We want to keep an eye on that. So the the weeks
Hmm.
ahead should be kind of interesting to watch. And then, as we mentioned earlier, the earnings season coming in. So that is our overview. Now let's go to, I want to just show you quickly what I'm doing here on school. So we've got two positions open. We've got Coke. So if you're looking for our charts of the week, they're going to be filed here under chart of the week library. So there's the AMD video, the Coke video, and the Lowe's video. What I'm doing is I'm adding the stop, current stop that I would have for Coca-Cola. So if you go to that video and you click on this link, you'll see what we want to see happen on Coca-Cola. So this is where we are now. For the purposes of the paper money account for the Empowered Investor Pathway, a position was bought at $66.24. And we want to make sure that it does not go below the red line. Now, it's the body of the weekly candle. We don't want the body going below the red line. So the stop is at 65.10. Okay. So if you go to the video, if it's a position that is one that we've put forward and it's moving higher, then you're going to get the information that's current to that position. And the same thing with AMD, current stop. So AMD was purchased at 162. It had this big gap up. AMD resolved the week with kind of a doji looking candle, right? Where it opened here at the high, closed at the bottom, creating a candle. So the reason this candle is dark green and not red is because it closed higher than the prior week. Okay, so it's going to be dark green because it closed higher than the prior week, but it closed lower than the open. You see that? So you see this little
Did
candle
you
right here? This dark green one? See, it closed higher than the prior week, ever so slightly, making it dark green. If it's red, it means that it closed lower than the prior week. So you don't see these very often, but that's what it means when it's dark green. Because it gapped up, it closed higher than the prior week, but it closed lower than the open. And the wick at the top and the wick at the bottom are kind of equal. So AMD is looking for direction. And so we're going to say we want the body of this week's candle to be above our red dotted line. Because if the body is not above the red dotted line, then it might be going to fill the gap, this gap that was created. And that's a nice profit. Any questions about
Mhm.
that?
you chose 211 as the stop because that's the bottom of that upper candle?
Yeah, and it's just an area. I want to be below the body, slightly below, give it a little bit of wiggle room. Um, and a reasonable area. So I just want the candle from this week to show me that it's got some mojo left in it and that its intention based on the candle from this week is to move higher, not lower. Okay, because we have a gap to fill, and that would be a shame to lose those profits on the gap fill.
Right.
So, so that's the thing. So what I'm doing is I'm putting a calendar event Friday at 3 p.m. I'll look at those positions and I'll do a quick video and I'll say, okay, we've got 2 positions opened. Here's what they're doing.
We have 2 charts of the week out there now, paper money all, and we want to get into the practice of making sure that they're doing what we want them to do every week. So we're going to create a watch list and we're going to go through it at the end of the day on Friday to make sure that the weekly candle is honoring our stop area. So on AMD, we want the weekly candle to close the body, very important, body of the weekly candle to close above the red dotted line at $211.20. Okay, doesn't have to be exact if it's 19 or 18. It doesn't have to be exact. But if it closes below the red line, then we close the position. Okay. And Coke is just getting started. So our stop on Coke is at 65.10. So we want to make sure that this Friday that Coke is doing what we want it to do and it's staying on the right side of that V. We're going to be giving it a little room, but we want to make sure that Coke stays within that V. And if it doesn't, and the body closes below the red dotted line, Coke is out of there. Okay.
So I'll be creating one of those videos for you every Friday at 3. And I'm also going to share this chart list with you.
Okay.
Okay.
So on the Coke chart that you just
Yeah.
showed,
Yeah.
so you're looking at the weekly time frame to watch if it goes below the red line.
Yeah.
Okay.
Yeah.
Not daily, then the weekly.
Not daily, no. So it depends on who you are, Grace. So for someone like me, I am looking at things daily. But for someone who's working and busy and doing this, it's weekly. So here's our charts of the week. Here's Coke. There's AMD and there's Coke. So we're thinking that Coke is just going to work its way up like it did over here. And this is the beginning of that lift. But Coke has to prove itself to us week after week after week that it's doing what we want it to do. So at 3 p.m. on Friday, I'm just going to look at these 2 positions as we add them, and they're paper money because I can't talk to you about anything real. It's paper money, but I will deploy our system and say, okay, is Coke above the red line? And if it's above the red line for the body of the candle, it stays in there. But if it doesn't, it's eliminated. Does that make sense?
Yeah.
So we're looking at it on the weekly time frame. So we're making our decisions on the monthly and we're monitoring and taking action on the weekly because the weekly turns into the monthly. Okay. Does that make sense?
Yeah.
Okay.
So let's say we are watching it daily,
Yeah.
like I was, and on my 4 indexes, the 3 and 8 crossed.
Yeah. So the 3 and 8 is always going to lag what's actually happening. So
I'm late. Shouldn't I be getting out? You
you're,
know what I mean?
well, we're talking weekly and we haven't got a 3 and 8 weekly. So we've got
Gotcha. But since we did on the daily, we're gonna watch the week for that same
yeah, so
aspect.
let's stay specific to Coke.
Okay.
Let's stay specific to Coke. And here is the 3 and 8 on Coke. Let me zoom it in. So there's the 3 and 8. It hasn't crossed yet on the weekly. So you're always going to be better off using the candlestick method. But if you really don't want to learn candlesticks and it's daunting, and this is the easy method that I put forward, nothing's going to be really perfect, but this is a methodology that is pretty good, right? And it doesn't work on penny stocks or stocks that move around a lot. I shouldn't say, like It's going to work really well on dividend kings, dividend aristocrats, and very stable charts with long history because they are more predictable in the way they move. So the 3 and 8 works really well on the weekly time frame for these stalwart stocks like Coca-Cola, McDonald's, Microsoft, Apple, those kinds of names. So you can see on the 3 and 8, you would have been late getting in over here in 2025. Or sorry, this is December. Oh yeah, so early 2025 here when the cross happened. But how easy is that to just check that every week and go, is the red under the green? And then here is the crossover. But that's nice profit, right? Easy peasy. So this is easy, but it's not as profitable as using the candles because you're going to be late every time. You're going to be late on the entry and you're going to be late on the exit. So the candles might be the way for you to go. I'm going to teach you both methods, candles and 3 and 8. So we're not paying attention to the daily gyrations. This is the weekly. And so if I turn it into the S&P 500, what we're doing is we're in a situation now where the S&P 500 is very far from the blue line, weekly and monthly. So normally I would say the blue line weekly is going to be our line in the sand, but we're very stretched because the market is very stretched. So if you really, really, really are concerned about holding on to profits, then the weekly 3 and 8 is going to help you and get you in or out earlier than the blue line on the weekly or the monthly. I'm going to go
So
over.
even though your exit rule says to look when the 3 EMA crosses the 8 EMA on daily,
Yeah, sorry,
you
that template, the trading plan is just a template. We're gonna fill it in and finesse it as we go forward. So if it says daily, we're we're using weekly.
okay.
Okay, so that's just that's our just rough template that we're going to be building and finessing and filling out. So here's the S&P 3 and 8. You would have missed the crap in April, right? Because this is March. You would have been out there and you would have been back in here. But you never know. You never know if the market's going to recover the next week. So it's all about capital preservation and monitoring from both a weekly and a monthly point of view. Okay. So I guess what I'm trying to say is the market is really stretched right now. So let's go back to our original. No, I don't want to save that. Thank you. Our
Should we be monitoring daily if, like, with the news about the tariff?
am I monitoring daily?
Should we, like, do we
Well,
have to monitor daily with the because of the news of the tariff? If anything, if any new policy is um enacted?
you could this week the market is gonna digest a lot of information. So
Yeah.
Mondays sometimes are drama days. There's gonna be drama. It usually happens on a Monday.
Okay.
So there's this, the likely scenario is tomorrow morning the markets. Now I don't have a crystal ball, but given the way Friday looked, there's a possibility that the futures will be very red.
Yeah.
And so you've got to wait as the market digests the data from the day, and the earnings that are coming in from the big banks are going to be really important. And they come in around, I think it's Tuesday, Wednesday. Those big banks are really important. So the market is going to gyrate a lot this week. And then if the CPI number is,
Mm.
they're able to collect the data and The market is going to digest all that information. So we're super stretched. We're way up here. So normally what I would say is I'm always monitoring the market relative to this blue line and the idea of wide state, narrow state. So we know that we're in a very wide state, right? If I pull this back, going back 20 years, we can see that we're in that wide state. And in wide state markets, there can be drama. You never know. Like COVID was a waterfall. We don't know what's coming around the corner. We're just doing our very best to walk the line between being prudent and being balanced and not overreactive, and also understanding the overall posture of the market and where we are, and being ready to make decisions. So we are wide state, but we had a very positive month of September. So we really got to remember that the market, so I'm going to pull it back to the smaller time frame. September was really positive. So I don't sweat it too much until I break the body of the prior monthly candle. So do yourself a favor. You can watch it if you want during the day, but it's going to drive you nuts.
Yeah.
So just wait for the weekly candle. If it's World War III or something like that, then that's a different story. Or if there's a 9/11 happening, then that's a different story. Then you have to react more.
Mm.
But those are outliers. So look at what happened over here when we got to that prior wide state on the S&P. We had these candles. Let me make that purple. That consolidated sideways. 1, 2, 3, 3 months in a row where they held their territory. And then this candle right here was the one that broke the bottom of the doji, but the bottom of the prior candle, I should say, sorry. So when it breaks that area, like it did here, then that's serious. When it broke that base. So we are going to use this as our reference point. So that's the big time frame border line in the sand, but we're going to watch the weeklies because the weeklies create the monthly. Okay? Does that make sense?
Mhm.
So it was building, 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 and then it broke, and then crap happened. So this is where that 3 and 8 would have crossed, right in this area here. So the 3 and the 8 would have crossed there. But it would
So
have got
then-
roughly. So you have to decide, who do you want to be? Do you want to be the one that is really responsive and you're doing the 3 and 8? You live with a little whipsaw from time to time, like here, right? That would have been in, out, and then back in.
Mhm.
So if this week's another down week, the 3 and the 8 maybe won't even cross on the weekly until next week. Is
Yeah.
that what you're saying?
Yeah.
Okay.
Yeah. So what I do is I monitor 3 things. I monitor the blue line on the monthly, and then I monitor the blue line on the weekly, because the monthly is going to take forever to change. Right? It's like
Yeah.
a big steamship in the ocean. It takes a long time to turn that thing around. The weekly is going to be way more sensitive. So the weekly would have really helped you in 2022 here. This is the weekly. So I monitor the weekly and the monthly. So look at how the weekly 50 would have really helped you save a lot of resources in 2022 when it went below. Okay. But we are very stretched to the weekly. So the market has been really, really strong. So we're dealing with a little bit of a tough situation in that, do I want to wait till it gets to the weekly 50? Not really, because that's a lot. So I'm monitoring the weekly. I always want to make sure that the weekly blue line is tilting up, the monthly blue line is tilting up, and the market is showing me strength on the weekly with the time frame of the candlesticks. So the best we have right now are these candlesticks. And the candlestick saying that I'm holding that area of support or I am getting weaker. If this week says I'm getting weaker, then the 3 and 8 could help you because we're very far from the weekly 50. So I have Apple. I've got a nice juicy profit in Apple. I bought Apple in this area down here. That would take away a lot of my profits if I wait for Apple to get down to the 50. So I will monitor it this week and I might trim my Apple, sell my Apple because I don't want to see it go down to the 50 and find that support and then re-engage. But I'm a very active investor, right? So what's right for me might not be right for you. Here's the 3 and 8. On Apple. So it's a long way from crossing over. But it's kind of helpful to understand that we are very stretched. There's a lot of data coming into the market. There's a lot of data that could possibly hold this market up and continue the uptrend. But we're protecting profits. And there's another train coming along when we do get to the bottom and we do find that support. There's another train that comes along for us to get on board, right? So it's just dealing with the market and what the market is giving you right now. And right now, the market is giving us, it's been going nothing but up for 6 months. So we're in nosebleed territory and the market is digesting a lot of information. Do we want to use the 3 and 8 or do we want to see it go down to the 50 weekly? We have to decide that. So we're very early on in the course. So it's kind of a bummer that we're heading to this possible turn in the market so soon. But, weeks from now, we're going to have a really solid plan where we're going to say, I am the kind of person that wants to obey the 3 and 8. I don't want to wait till it gets to the 50 weekly. But you have to figure out who you are, what kind of person you are individually, and maybe you do want to look at it daily. But I'm saying I'm accommodating right down the middle and saying, let's do the weekly. Does that make sense?
Yes.
So the very best we can do right now is the weekly time frame. The weekly is really going to tell us a lot on the S&P 500. So super important to remember that September was really strong. We still have 2 weeks left in October. Earnings were really positive last quarter. Earnings were good, and that those earnings helped us get to where we are now. So unless something dramatic has changed in the marketplace that the market knows and we don't know yet, earnings should be decent, right? And so that's why it's really important to watch how earnings are being reported and how companies are adjusting to the new environment of a little bit more inflation. How's the consumer doing? Are they still healthy? Are they still buying? Are they still holding things up? So earnings, as they come in the next 3 weeks, are really going to tell us a lot. And the market's going to digest that day by day as those earnings come in. And the earnings that they're really going to key in on are the banks and the Walmarts, the Costco's. That's the consumer stuff. How's the consumer doing? And then that CPI number on Wednesday, if it does get reported, that's an important number because that's going to affect the consumer as well. If inflation is going higher, then that means groceries are getting more expensive. And if groceries are more expensive and you're spending a couple of hundred extra on your grocery bill, are you booking a trip? Are you buying on Amazon? Maybe not as much, right? So one thing leads to the other. It's all about step by step watching how the market reacts to those earnings. Speaking of the consumer, let's go take a look at the consumer ETF, which is XLY, consumer discretionary. This is a 5-year, let's go back to the 10-year. Consumer discretionary ETF XLY looks as though if it has a strong month of October or November, it might be breaking out into it came up to this high level and then it backed off. This was April, and this is where we are right here, right now. But the consumer has been, as illustrated by this ETF, pretty good. So if we can erase the red from the first part, like Friday was the day, but otherwise we have 2 weeks left in the month. How is this candle going to look? And if it starts to shape up and be bullish, well, then it's breaking out to new highs. So balance in your mind your bearishness. Friday was dramatic, and it kind of puts a thought in your mind of more to come, and maybe that's the case. But we have to approach the market with an open mind and what the weekly and the monthly charts are going to tell us. And weekly. So what I am going to be really watching is I'm not going to be too surprised if tomorrow the futures are lower, but I will be watching the banks. I'll be watching. This is the ETF for the financials, XLF. This is how the ETF for the banks, the financials is looking. It's coming into this area of support. Let's go back. Let's go a year. Annotate. There. So the financials are coming into a strong area of support on the weekly time frame. JP Morgan, Goldman Sachs are really going to have an impact on the candle for this week. Watch the candle on the financials, XLF. And see if it can hold that purple dotted line. I'll send you guys a screenshot of this so that you have it. Or I can even send it to you once they report at the end of the week. Do you want me to include this in my video at the end of the week when I look at Coke and AMD?
Yeah.
That might be the easier way to go, eh?
Yeah.
Okay, so I'll do that. But the financials are going to be really super important. I won't save it here. No. And so how are you doing with stock charts and stuff? Have you got your buttons set up on the left? I know, and you're using them and you're navigating around the site pretty well? Having your buttons set up over here on the left is really handy. So Pam, have you got, I forget if those are all set up with you. I think they are, eh?
I've
Having,
set up mine with the buttons on the left.
yeah. So
Yeah.
how many buttons do you have, Grace?
I think I have 5.
Yeah, good. I love having, I
Yeah.
love looking at my charts in various different ways that are kind of
Yeah.
tailored to me. So I love the 5-year monthly, of course. And
But
then,
when I hover though, it doesn't show that title on
oh, it
the
doesn't?
buttons. Yeah.
Have you named them?
Yes.
Name them and they don't,
Yeah. I don't know. I have to check the settings then just
yeah,
to have it
they
show up
should.
like
They
that.
should. They should. So that's really key. And then can I show you a function on stock charts that I think is really worth knowing about?
Mhm. Yeah.
Here, click on this link up here in the far left, stock charts. Click on market analysis, go to sector drill down. And now here are the 11 sectors of the S&P 500. These are the ones that make up the S&P. So these are the big sectors that you want to keep an eye on. If you click this drop down menu here and you sort it for strength for 6 months, 3 months, whatever you want, this is really super handy to look at. So if tomorrow markets open red and you're coming to look at your charts at about 11 or 12 noon, you can use this intraday to see which sectors are showing strength on the day. So on a day that's really confusing, sometimes I'll come here and I'll go, okay, which sectors are showing me relative strength to in comparison to the others? And if I see financials up here showing relative strength in terms of all the sectors, then I know to look at JP Morgan or Goldman Sachs to see if they're starting to lift because sometimes they lift before the overall market lifts. Does that make sense?
I see.
So
You go to the individual stock.
yeah, so there are certain stocks that I consider like my admirals. Microsoft is one of them in technology. Goldman Sachs is one in the financials. So if Goldman Sachs is starting to lift on the day, then I kind of read the tea leaves and I go, well, if Goldman Sachs is lifting in an otherwise red day, then what are the odds that the market starts to follow Goldman? It's the little canary in the coal mine that's telling me early that the market might shake off the red and start to shape up and recover a little bit. So this is handy if you're confused during the day. Take a look at this sector list intraday, and it will help you see. And then what you can do is you can click on the title, and it's going to pull up all the names in the space. And what I do is I sort it for the largest ones. I want the big ones. Sorry, did I? Oh yeah, so here's the subcategories. These are the industry groups in that category. So there's sector and then each sector contains these individual industry groups. So I go to the industry group, soft drinks, and now I can sort the largest names in the basket. So this drop down over here, if I click it, it gives me the largest names. So I don't really want to get, I keep it focused. I don't really want the small to mid guys. I want to stay with the large, big guys like PepsiCo, Coke, and I can watch to see how they're behaving on the day. See, it'll show you that intraday strength. So I can see how's Coke trading relative to PepsiCo. Or if Coke's a little red, but Pepsi's green, I'll go, okay, it would make sense to me that Coke will follow Pepsi. Let's look for some strength to come into Coke. It's like you're the coach or manager of a baseball team, and these are individual players. And understanding how the individual players, what their strengths and weaknesses are, and how they're going to help you win the game. So you want to be in strong sectors and you want to be in strong players. So you're choosing sectors and players that will win the game for you. And Coke for me is one of those players. Does that make sense?
Yeah.
But do you see how that can help you out by understanding these sectors? So go to this market analysis, go to the sector drill down. Here are the 11 sectors. If you click on one of the sectors, you're going to get the individual industry groups in that sector. Okay. And each one of these, if you click on it, will give you all of the companies within that industry group. So one more time. Here are the 11 sectors. We were expecting consumer staples to get a bid because it has been the laggard for 6 months. So we're thinking that the baton at these lofty levels where the S&P is so high that the baton might be passed to the consumer staples sector because it's been the laggard for 6 months. Everything else has gone higher, higher, higher. It's been the laggard. We're going to pick the best member team player from that sector. And for me, that's going to be Coke. Coke is in the soft drinks sub industry group. And here's how I see Coke and its constituents in that industry group. And then if you go down further, you can do a summary, symbol summary, and it will tell you when Coke's earnings are coming up. Next earnings date. You can set alerts. So Pam, you are in Coke. You want
I
to,
am, but after looking at what you just did there, the soft drinks weren't the strongest in that XLY. So I guess I'm confused with that.
okay, let's talk about that. So we are thinking that the baton is going to get passed to XLP, consumer staples.
XLP, excuse me. Yeah,
Yeah.
sorry.
Okay. So let's click on this. So everything else has been super strong. Consumer staples, which are things people buy no matter what. This is where the market will go when the market gets kind of nervous because consumer staples are conservative in terms of the other parts of the market. Technology is a giddy up sector where when the market is moving higher, technology moves really aggressively. This is more conservative. XLP, consumer staples, more conservative. We're going to click on it and then we're going to see that soft drinks, look, they're right in the middle. So they're looking for direction, right? So there's nothing wrong with looking in these bottom sectors or industry groups, I should say. But let's check our thinking. We're looking right in the middle, Pam. So if XLP is going to rise, then this guy is looking for direction. In the last 6 months, this bar is teeny tiny. It's like a doji. It's undecided.
Okay.
So it's going to decide if XLP starts to get favor, then soft drinks are going to go higher. And this kind of red, tiny red bar, which is kind of like a doji, is going to decide and it's going to move up the ranks. That's our thinking.
Got it. Okay. That
Okay.
makes sense.
Yeah. Yeah. And so we've picked an amazing player because we picked a player that is both a dividend king and a Buffett top 5 holding. It's a really high quality name. So if the market does rotate into consumer staples, those smart money guys that are running hedge funds are going to run to things like Coke first because it's got such a great pedigree. Coke is not going to sit there while consumer staples goes higher. Coke is going to go higher with it. Okay.
Did they already start running to Pepsi though? Because with the good earnings, or
Yeah, Pepsi's another contender, but we're
okay.
I'm trying to focus everyone's attention on the lists. So instead of chasing 10,000 names out there, I've given curated lists that keep us more focused on the process and our thinking. So Pepsi's amazing. It's a good stock too, but it's not a Buffett stock. I'd have to check if it's a dividend king. I don't think it is, but Coke for sure is. Okay, so if we look at the chart of PepsiCo, is it uptrending? This is PepsiCo. Is it above the blue line? No, but Coke is. So Coke's the better way to go in terms of how you think about making decisions. Because the blue line is tilting up. It's already in this uptrend. Look at the trend on this thing. Going back 20 years. Holy moly, right? So you're picking a really, really strong player that's been in a beautiful uptrend that has a really nice dividend yield. I think Pepsi's is slightly higher, but it's below the blue line. We want uptrending, tilting up blue line.
Yeah.
So we're keeping it simple. That's why the list is keeping you focused and keeping you on track in terms of what I'm trying to convey in terms of your discipline and your process and how you check the boxes. Is the overall market going higher? Check the box. So let's go back and do that for a sec. So the S&P 500, is it in an uptrend? Yes. Friday was ugly, but it's still in an uptrend. So it still has to prove to us in the next 2 weeks how this candle's going to shape up. But I'm going to check the box. Yes, it's in an uptrend. Yes. Is the sector that Coke is in an uptrend? XLP, yes. It's in an uptrend. 5-year monthly chart, and it's consolidating here at an area of identifiable support that I can see. So the sector has been lagging, but it's at an area of support. And it's showing me a candle that suggests that it's going to be either a doji or a bullish candle. And so I am going to go to the best name that I can find in that sector, and Coke is it. And Coke is doing what I want it to do. Okay. So we have 2 weeks left. Can this turn red? Yes, for sure. So we're monitoring it, but what we saw in the chart is manifesting already with the weekly time frame. So we'll expect a little bit of wobble this week because the market is digesting a lot of information, but so far so good for Coke. And it's trading in this wedge. If it breaks out of this wedge, Coke is really going to do well in the months to come. Whoopsie daisy, sorry. I'm going to choose this wedge there. So what I'm thinking is going to happen in November is this. And it's going to march higher. And then it's going to be December. And then it's going to be January. And then it's going to take out this prior high. So that's what I'm looking for. So week after week, we're going to watch Coke and we're going to say, are you doing what we wanted you to do? And so far, so good. So far, so good. I'll take away the blue line. I don't want to have the blue line in there to confuse you. But so you see the process? Okay. So really strong player in an industry group that is likely going to get a bid and some attention here at this lofty level. We're staying in the railroad track of the V, and we're going to watch it week by week. And the weekly candles are going to make them monthly. And once we have the safety of a positive monthly candle, a positive monthly candle is the positive point candle. And then it starts to build month after month after month, but we're going to watch it week after week and just make sure that it stays in that track. Okay. It's a lot to take in at the very beginning of this course, right? Because Friday was such a diabolical day and we're at very lofty levels. I wish we were starting off at a narrow state where it's a lot easier to say, yeah, no, it'll be okay. But we're at a very wide state, and so we've got to manage that. But so far so good with Coke. We're good. So we'll monitor the week ahead. We'll see if the market can recover from Friday's price action and start to firm up and give us an anchor candle on the weekly that says, yeah, we're good. The earnings are coming in okay. Maybe the shutdown gets figured out and the market gets on its way again. So we want to see if we can get a positive candle to erase the damage. And then that would be, if we get that positive candle at the end of the week, might be a good spot to add to that Coke.
Okay.
Grace, are you okay?
Yeah.
Yeah. So we'll watch it. Tomorrow will be interesting. I will be putting out my video on Lowe's tomorrow morning. So not buying Lowe's yet, but what I'm looking for on Lowe's is the turning point. So I'm looking for Lowe's to do what Coke did because it's coming into this base on the weekly. And this is a dividend king that if the market starts to shape up, I am looking for Lowe's to give me a positive candle. And I'll be watching for that turning point. Okay, so what I want is the candle in an ideal situation with Lowe's. The candle from this week takes out the low of last week. That's where I'm going to be deciding. If the candle from this week can be bullish enough to take out that low, that is the intersection where I would be buying my first position in Lowe's. Just a small little position and then add to it. So we'll watch this one develop as the days go by, okay? But the video goes out tomorrow morning on why I chose Lowe's and the big picture on Lowe's. And then we'll have 3 charts out there. AMD was number 1, Coke was number 2, and Lowe's is number 3.
Okay, so tomorrow's video, do you do a live on Tuesday or is that still on the calendar?
Yeah, I've just have 15 minutes. I know it's not much, but yeah, that'd be fun. Let's do, if you're around for 15 minutes, we can live in
Mhm.
the market, take a look at Lowe's. And we can look at
Yep,
Coke.
and then Friday you're
Then
doing
Friday,
a
I'm just
video
going to
too.
do a quick little video. It's going to be recorded. That'll help you as I look at the two open positions that we have right now through the program. We opened AMD and we opened Coke, and how it's paper money, paper trading, but how I am paper trading those and how they are reacting around our lines of support and the stops that we put in place and the rules that we're following. So at 3 p.m. it's just like going to be a minute long, minute and a half. Did it violate the red line? Gone. Close the position, done. Is it giving me a positive candle? Adding a second leg. And AMD, same thing. Is it showing me a candle that says it wants to fill the gap? Well, then I'll be watching for that. I'm watching for that body. And again, it's just a short little video, but it'll help you if you're trying to decide. It's 3 p.m. It's towards the end of the day. It's towards the end of the week. You've got enough data to be able to figure out what you want to do. Like sometimes the market will have that last hour will be very dramatic, but I need to give some sort of a buffer. So 3 p.m. is when I'm going to do it. Is that okay? So it'll all start. It's a lot of information coming at you right now, but monitoring these live positions is going to be really instructive in terms of decision making and analyzing the market and monitoring your positions and doing what you're doing because of what the explanation is, right?
Mhm.
So, Mr. Market, please settle down because we really like when you go up and earnings are coming in and the technology sector is changing a lot of stuff. And let's hope the government shutdown thing gets resolved because I feel sorry for all those people that are in limbo, not having paychecks. That's crazy. So there's a lot that the market has to figure out this week, but only time will tell. We have no idea, right? So approach it with an open mind, follow your rules, watch the weekly candle, and make good decisions. And where was Sam? That's unusual that he wasn't here. Oh, well. So pop in. Grace, do you think you could come? It's only 15 minutes because I really want to make my workout class on Tuesday, but we can get a lot done in 15 minutes. So we're like bang, bang, bang. Like, okay, let's look at the market.
Yeah.
One,
I'll try 11 o'clock, right?
yeah, 1 minute on the S&P, 1 minute on Coke, 1 minute on AMD, 1 minute on Lowe's. Away you go.
Yeah.
Okay. Sounds good, guys. I hope that wasn't too confusing. I hope you got something out of it.
Yeah.
We're making our way.
Yeah.
We're going to be printing off our trading plans and tailoring them to our own specific needs and what we are all about and what we want to do. So that'll be in the next few weeks. We'll be starting to really work on those individually in our one-on-ones.
Sounds good.
Okay, guys. Have a great Thanksgiving here, and we'll see you on
Too.
Tuesday.
Yeah.
Bye, guys.
Okay, thank you.
Bye.
Bye.